Welcome back. The secondary markets are doing fine with a nice bounce, 35 points. Lower is all that there is now, 22,266. We've got the primary market action, which was also, of course, been hot. Bangalore-based housing finance company, Aadhar Housing, their IPO is opening today. It's a company which is focused and lends to the lower end of the economic strata of the population. And the issue for 3,000 crores, they want to raise 3,000 crores, starts today. The anchor book, of course, was done yesterday, and they raised about 900 crores from there. We have Mr. Rishi Anand, Managing Director and CEO of the company, joining us here in the studios to take some questions. Rishi, great to have you with us here.
Thank you so much. Very good morning.
At the outset, let me wish you all the best of luck.
Thank you so much. Much needed.
We were just chatting, right? 2010 you kicked off.
That's right.
And you, in 2024, now as we speak, you're at about, 18, 19,000
We are about 20,000 crores of AUM.
AUM.
That's right.
And you've grown at a CAGR of over 20%.
Over 20%. Over 20%. In the last 3 years, over 20%.
Is that the rate of growth that one should expect, investors, viewers who are watching, that one should expect going forward as well?
I would say at the size that we are, 20,000 crores, and the segment that we deal with, 20% is quite a reasonable number.
Okay, 20% growth is a reasonable number. Rishi, good morning and thanks
for
joining in.
Thank you so much.
So 60% of your loans go to salaried class, 40% to non-salaried. Tell us a little bit about what the demand trends are looking like right now. What are the challenges that you're facing? Because, affordable housing, the segment has seen a bit of a slowdown in the last couple of weeks and months.
So when we talk about, the segment, we'll have to first relate to what is the segment that we fund to. We typically fund to the lower strata of the society, which is the low-income housing segment. We typically call them as economically weaker section and lower income group. That's the segment we cater to. And then there is this question around, how come salaried in this segment? So when we deal with salaried, I can, throw a few examples here. So we fund to people who are government salaried employees, class 4 employees of Government of India, police jawans, army jawans, drivers, maids. So these are our customers. Is this segment challenging, as you asked? I would say no, because there is more than enough demand in this segment. And if I were to quote a report by RBI in 2019, the total housing unit shortfall in the country stands at about 10 crores, out of which 9.5 crore comes from the EWS LIG segment that I cater to. So there is more than enough demand to cater to.
Okay. All right. Thanks a lot, sir, for coming down. Well, a couple of quick questions then. You have an OFS as well as you're going to be raising primary market as well. So 1,000 crores comes back to the company. How does it change your tier 1 ratio? If you could help us out with that. And I'm also looking at the breakup. The non-home loans, that's gone up, I think, from around 15% to around 24%.
That's right.
As a percentage of the mix, how does it change? So on both these two.
So at the AUM level, at the company level, in terms of the portfolio mix, we are today 23% non-home loans. And when we say non-home loans in our kind of business, the kind of segment that we cater to, these are micro loan against property with an average ticket size of about 8 lakhs. And on the home loan side, our average ticket size stands at about 11, 12 lakhs incremental. On the book, the ticket size stands at 10 lakh rupees. So when we say loan against property, it is not the MSME loan against high ticket loans. These are very small micro loans. And the way the management looks at it, at any given point in time, we will be in the range of about 75-25 home loan to non-home loan ratio.
Got it. And how does it change your tier 1 ratio since your 1,000 crores will be coming back into the company?
So today, in terms of tier 1, we stand at 39%. And we should be hovering around. So we will see for example, if I were to look at the RoE ratio, how will they move? The moment the primary comes in, the RoE ratio, which is at about 18.4%, should drop to about 17%, and it will take a couple of years to be back into about 18.4%.
Rishi, another housing finance company I was talking to is telling me that, the journey from zero to about 12, 13, 14,000 crores, 15,000 crores, I mean, that's like it's not a, you get there fast, and then after that it becomes a little, because the size becomes bigger after 15. You're at 20. I mean, just wanted to address
that. So we've been pondering around this question when we were less than 15,000 crores, and we were asked these questions: would anybody cross 15,000 crores in the segment we cater to? We crossed that 15 crore mark. Then the question was, will we reach 20,000 crores? As we speak today, we are already 20,000 crores. And I would go back and relate it to the demand. There is more than sufficient demand, so why not? We are the largest by far in the segment that we deal with. And we are a monoline company. We have no other product lines. And we would want to continue to grow in this segment.
Is enough housing stock being built on that side? I mean, that's again something, a feedback one has heard. That is largely now, everyone wants to move up the price curve. I mean,
see, housing stock built also relates to, again, I'll come back to the segment. What is my customer buying? What is he doing with the money that I give him? So 40% of my portfolio stands at an individual buying a ready-built property from a second individual. So it's called resale in our parlance. And about 35-40% of my customer is doing self-construction. He owns a plot, he wants to do construction on it. So whether a new housing is get created or not does not matter too much. What my customer is buying is available.
So we're not talking about typical apartment. I mean, that's not the
developer-led construction.
The developer-led. That's
so
not
it is not prevalent in the segment that we deal with. It is more of individual resale.
Okay, I'll come to that in a bit. You were telling Nigel that with the fundraise of 1,000 crores, we were discussing a tier 1 ratio. What would your tier 1 ratio be post that?
So what would it be? Let me come back to that question once
again. Okay, we'll come back to you in a bit. I want to know what is the affordable segment growth rate for the industry that you're expecting. I'm asking because, we are seeing some signs of trouble, right? Whether it is a job situation is not that great, cost of living has gone up, inflation is hitting a lot of people. So in this lower strata, do you think the affordable housing segment may not grow as fast as what it did in the last couple of years?
In fact, I would want to put it the other way around. With our experience of 15 years with the segment that we're talking about, it is more volatile and more flexible segment. And I would maybe take you back to the COVID times and post-COVID times. What actually happened is this segment of the society were the first ones to come back to the jobs. They were the first ones to, and when I say volatile, today one of my customers, let's say, is a salaried customer. Tomorrow morning he goes and opens a shop. So very volatile, very flexible customer segment. We have not seen any degrowth in the segment in the last 3 to 4 years, post-COVID at least.
Okay, all right. So we'll wait for you to come back on the tier 1 ratio, how things change out there. But I think one thing that's supporting you is the valuation-wise, it has some comfort in comparison to the listed peers, and that chart should come up for our viewers on the screen. Final question, sir, before we let you go. The NIMs have been improving, and as you mentioned, the non-home loans as well, that part of the business has been moving up.
Right.
Do you have further, levers in place to see it open? Because if we pull up a chart, the NIMs have improved nicely over the last few years.
That's right. So NIMs today close are upward of 8.5%, close to about 9%. The way NIMs work is, we typically at the organization level, we work on something called spreads, and the spreads are topped up by treasury income. So what we follow is spreads. We have been at a healthy spread of anywhere between upward of 5.5% to 6%, which is a major contributor to the NIMs. The management feels that we will be able to sustain these kind of spreads as we move ahead in the business.
Well, we wish you well, sir. Appreciate you joining in and giving us
so much.
Fair insights on the business. We look forward to the listing, and on that, maybe in fact we'll press you for a few more numbers as well.
Thank you so much.
And all the best with the listing. Thank you for being with us here.
Good day. Thank you. Bye-bye.
Okay. With that.